Well, the markets start the trading week on a cautious note with a tinge of volatility. The financials lead the gains while realty and auto drag. Broader markets outperform in trade today.
JB Chemicals down over 6% after Torrent Pharma acquires controlling stake in the company. The transaction will be executed in two phases with a total purchase of up to 19,480 crore for the 46.4% stake.
Shares of Karnataka Bank fall as much as 7% after the lender's managing director and CEO, Mr. Sarma, along with executive director, Mr. Rao, both quit, citing personal reasons.
Shares of Hero MotoCorp trade lower after reports of the government issuing a draft notification for anti-lock braking systems become mandatory for two-wheelers in the L2 category.
Well, hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, with me is Mangalam. And the market's, well, cooling off a little bit. That's just the headline index. The good news is the mid-cap index continues to trade in the green. And there are a lot of stocks doing a jig of their own. Hey, Mangalam.
Hi, Nigel. A lot of stocks doing a jig of their own. And the key in that are all these PSU banks. So, at a time when the Nifty bank is just about 100 points lower, pull up the intraday chart of the PSU banks and you'll see a big up move out there. Leading it from the front is State Bank of India, up around, 1.5%, a little more than that. And you do have all the others as well. Union Bank, Indian Bank, we have Punjab National Bank, all of them higher in today's trading session so far. So that's one sector which is really standing out in terms of gains. The other one is the pharmaceutical pack, where we are seeing some traction build up in names like Laurus Labs, which is up and above in today's trading session, Alembic Pharma. The only couple of pharma stocks which are lower belong to the ones that were participating in the Torrent and JB Chemical deal. So Torrent actually on hopes of or on worries of near-term EPS dilution mildly lower, and we have JB Chemicals as well as pharma lower on account of the deal being done at a discount. No worries for the market by and large. Shivangi Sada joins in for a quick technical check on the market. Shivangi, we've put on decent gains all of last week. Do you think this dip is an opportunity to buy, or maybe you'll wait for a further dip?
Hey, good morning, Mangalam and Nigel. Thank you for having me. So we've seen that, of course, there has been quite a comeback of the bulls last week. And the way we closed at the higher zones indicates that, somewhere support-based buying is quite strong. Today, of course, we've again had a little bit of a soft opening, but overall lower levels are being respected, which is quite crucial at the moment to watch out for. India VIX is at lower zones and it is still showing signs of comfort, along with Nifty put-call ratio, which is above 1 comfortably. So overall, we are recommending buy on decline to continue with some sort of consolidation. Of course, we've moved 850 points almost, in the last 1 week. So overall, some sort of pause is, healthy over here. We're looking at 25,750 marks next for the index, and with a support of 25,350 zones. So this will be the take on Nifty. Talking about Bank Nifty, of course, there's a clear outperformance here in this index today. We've seen that smaller banking names are driving this momentum today. At the higher levels, we are still holding above 57,000, which is a plus. So till the time it holds above 57K, we are expecting 58,000 levels here with a crucial, support of 57,000 to watch out for.
Okay, got it. All right. Hi, Shivangi. Good morning. Good to see you in. Give us your take on individual stocks.
The individual stocks on my radar, first up is Canara Bank. We've seen that good rollovers in the banking and the NBFCs for that matter. Stocks, and Canara Bank is of course one of them which has witnessed slow and steady up move in the last 2 weeks. We've seen that even on a month-on-month basis, this stock has been moving in a higher top, higher bottom formation from the last 4 months. So overall strength continuing here with a good short covering move following good open interest activity here as well. So we're recommending a buy here. The next targets for Canara Bank is around about 118 with a support of 111 zones. And the second pick on my radar is Indigo. We've seen that, of course, sentiments are back in action here. And from the last 2 sessions, we're seeing price and volume action quite significantly here. There was a good amount of long build-up in the June series and a good positive start in the July one as well. And even on the monthly basis, the stock has been trading in an upward sloping channel. So, of course, any small declines have been utilized for buying. And we are looking at next targets of around about 6,200 over here for Indigo with the support of 5830 levels.
All right, we take that point as we speak. The broader markets have seemed to move further higher, in the last 15 minutes or so. SRF is one of the stocks which too has recovered from the lows, currently at the high point of trade. And we are seeing similar traction build in names like HDFC AMC as well, who was largely flattish for most part of today's trading session and now has seen a spike similar to what we've seen in SRF. So watch out for all these stocks as well. But as we are seeing the broader markets move, let's get you some ideas of profit coming in from our colleagues at Money Control Pro. And today we have Lekha Badlani joining in with a stock that she's been tracking. Rekha.
Yes, so we like FIAM Industries, which is a leading auto ancillary specializing in comprehensive lighting solutions. Now, the company surpassed the two-wheeler industry's growth in FY25 by nearly 2x as it registered a 20% increase in sales. Now, this outperformance was driven by the growing adoption of the value-added LED lighting systems, which offer significant value addition and carry higher realizations. We believe that the consumer sentiment remains robust in the two-wheeler segment, supported by new model launches, rising disposable income, moderating inflation, decreasing interest rates, and expectation for good monsoon. Both urban and rural demand look well poised for a strong growth going ahead. Fueled by these catalysts, the management is confident of achieving around 15 to 20% top-line growth over the next 2 to 3 years. FIAM is also expanding into the passenger vehicle segment, securing orders from major players like Mercedes and Mahindra. Also, the low EV penetration in India presents a significant long-term opportunity. While a partnership with the EV company Gogoro is on hold, FIAM has secured contracts from top Indian EV manufacturers like Ola and Okinawa, positioning itself in the high potential market. Additionally, FIAM's domestic focus protects it from the global risk and geopolitical tensions. Given a strong business outlook, the company's valuation of around 20 times FY27 estimated earnings makes it an attractive long-term investment.
Thanks a lot for that, Lekha. Well, time to slip into a short break. But as we do that, remember to tune in to the all-new CNBC-TV18 Prime, bringing you insights from policymakers, business leaders, economists shaping both the world and India's future. CNBC-TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune in to CNBC-TV18 Prime at 12 noon for the Global Reset, at 1 p.m. for the Big C, where the focus is on cryptos, currencies, and commodities, and the Global Lens at 8:30 p.m.
Welcome back. You're watching us here on Chartbusters. A bunch of stocks, they're all buzzing around, and we have the entire team joining in to tell us about each of those stocks. We have Hormaz with us. We do have on the screen, as you can see, Vinny as well as Vamakshi, all of them telling you about stocks. And joining us on the phone line is Ritu Singh, no less. So we have the entire team here. Let's go across to Hormaz first. Hormaz, Uno Minda, that's the stock on our radar, right? A target of 1,304 rupees coming in from CLSA.
Long awaited, much bullish initiation from CLSA coming in on Uno Minda. Outperform recommendation, as you mentioned, a 1,304 rupee price target. And they're mentioning the fact that as a fast growing company, they have shown limited cyclicality in the auto ancillary space because they have a diversified product and customer base. They are also expecting their margins to improve courtesy of the fact that there is a revival in the industry overall. They're expecting the company to scale up going forward. Premiumization as a play comes into focus as well, and a better product mix that will contribute to this improving margins, and as a result of which they're expecting the company's earnings to almost double between FY25 to 28. And they are also seeing Uno Minda as a high growth compounding play with a lean balance sheet, and they are not modeling in any potential reinvestments of their cash flows as a potential M&A activity, which they believe is an upside risk for the stock. So as a positive initiation coming in for Uno Minda. The stock not doing much though, although the stock has moved almost 10 to 12% in the last 1 month.
All right, Hormuz, thanks a lot for that. Well, let's move to the next stock then. Tata Rail Systems, that's buzzing in trade on the back of a big order win. Winnie, she's the one who's going to deal with this one. Winnie, take it away.
Hi, good morning. So yes, Tata Rail, a big order win coming in. 430 crores is the order win coming in. This is mainly for the Maharashtra Metro Rail Corporation. Now, obviously, the contract is going to be for supplies of 12 additional train sets. Execution period is almost 1.5 years. 30 months is what we could say highlight coming in as well. Now, obviously, do not forget, recently also there were a lot of clearances coming in for the railway front. So this is especially coming in after those clearances have come in Maharashtra for the railway side and railway project front. And obviously, this is mainly a Pune Metro Rail project that is coming in for Tata Rail. A big one over there, 430 crores. So keeping an eye on that.
430 crore order coming in for Tata Rail Systems. And let's talk about divergent moves in the banking space. We have Karnataka Bank, which is sharply lower in today's trading session. RBL Bank is higher. What is it that is causing these moves on these stocks? Well, we do have Vamakshi joining in. Vamakshi, Karnataka Bank, top leadership leaving.
Well, absolutely, Mangalam. It bodes not so well for the company. When we look at Karnataka Bank, MD and CEO Sri Krishnan Harihari Sarma, as well as the Executive Director Sekhar Rao, both have tendered their resignation. Now, as far as Mr. Sarma is concerned, he has cited personal reasons, which also includes the decision to relocate back to Mumbai, while Mr. Rao too has submitted his resignation, citing inability to relocate to Bengaluru, as well as some other personal reasons. So, resignation coming in from the top leadership at Karnataka Bank, not boding well for the stock. The stock resultantly down and out in trade today. But on the flip side, when you look at RBL Bank, that is doing quite well. That is on the back of a note on that has come in from Citi. They've opened the 90-day positive catalyst watch. They have a buy rating on this counter, target price of 285. They say that they're expecting the return on assets trajectory to improve by 45 to 50 basis points. And this largely would be driven by normalization in terms of credit costs. They're expecting it to normalize to 2.2%. And the normalization would actually be led by subsidization of stress in joint liability group as well as credit cards in the first quarter. They're also expecting slippages to moderate to 4.5% as compared to 4.7% in the previous quarter. They believe that repricing of floating rate portfolio mix changes could lead to 28 to 30 basis points NIM pressure. The NIMs could bottom out in much sooner as compared to peers, and they're expecting industry average loan growth of 9%, deposit growth of almost 10% on a year-on-year basis.
Okay, all right. Thanks a lot for that, Vamakshi. Well, let's move on to the latest in JP Associates resolution. Sources say that 6 suitors submit bids, but only 5 have qualified. Ritu joins in to fill us in with all of those details. Well, Ritu, you ended last week with a big breaking news and starting off this one as well with a new one. Tell us more.
Well, Nigel, we have top corporates that have lined up, to throw their hat in the ring for JP Associates. On our sources indicate there are 6 suitors, as we have been reporting, that submitted binding bids for the company. But one of them, that is the Suraksha Group-led JP Infratech, did not qualify because they did not submit the EMD or the deposit money with the resolution professionals. But the 5 that do remain in the fray are corporates like the Adani Group, very much on expected lines, the Vedanta Group, Dalmia Bharat, which Nigel, you remember, was also trying to earlier acquire the cement assets of the company, and the Naveen Jindal Group as well, which is Jindal Power. Apart from this, the 5th player is a listed infrastructure company, PNC Infratech, that is also in the fray. Now, while the exact quantum of bids is not known, keep in mind the National Asset Reconstruction Company had acquired these stress loans from the banks for about 12,000 crore rupees, and banks believe that could set a benchmark for the bidders. But some of the suitors that we've spoken to indicate the offers could be even lower than 12,000 crores. Keep in mind the total debt amount is more than 57,000 crores. So a steep haircut for the lenders here, but all eyes now, of course, on how the bidding war plays out, especially with these kind of high-profile names in the mix.
Take that point entirely, Ritu. Thank you so much for joining in, and we trust you to keep us up to speed with all the developments that take place out there as well. In fact, on that note, we'll thank everyone for joining in. There was Hormaz, Vamakshi, Vinny, and Ritu for telling us about all the stocks which were in the news. And in case you missed it, let's tell you there's some good news for all of you. It's India's business news leader, which is CNBC-TV18. Just a click away on the CNBC-TV18 app, which gives you access to in-depth articles, breaking news in the financial world, and all the updates coming in on the stock markets at your fingertips. Things that we just spoke about, similar to that, on the app. All you got to do is download it from either the Apple Store or the Google Play Store. If you can't find that, then that's the QR code for you. There, download it and you get the app.
Back, you're tuned into Chartbusters. As we've been mentioning earlier, the Nifty is a little bit lower, but broader markets are doing a thing of their own. And KPI Green is a stock that's suddenly come on the radar. It's moved up, a bit of a volume spike out there, and that one has moved to the high point of the day. So I think we should get that one up for you on the screen, up close to around 4% as we speak. But let's focus on the big deal. JB Chemicals and Pharma, that's a little bit lower after Torrent Pharma's acquisition news that came late last evening. Ekta joins us to run us through the news and give us a quick analysis as well. Ekta.
Well, yes, Torrent Pharma will be acquiring JB Chemicals from KKR in what would be a two-phase deal. So phase one would be acquiring 46.39% stake from KKR for around 11,917 crores. They may acquire up to 2.8% from employees at around 1,600 rupees per share, and the open offer for 26% at 1,639.18 rupees per share. So that would come up to around 6,842.8 crores in terms of a total open offer size. The total deal value then could go up to around 19,480 odd crores. Now, the equity valuation of this deal is around 25,689 crores, which is a discount to the market cap. Closing market cap on Friday for JB Chemicals. The deal as a whole is 19 to 20 times FY27 EV to EBITDA. This compares to Torrent at around 23 times FY27 EV to EBITDA. Now, the phase two is JB Chemicals shareholders will receive around 51 Torrent shares for every 100 shares of JB Chemicals. The valuation and funding, the deal, remember, was at around an 11% discount to JB Chemicals' Friday closing price. The open offer also 8.9% discount to JB Chemicals' Friday closing price. The deal is likely to be funded via internal accruals, debt, as well as QIP. There's no clarity in terms of the combination or what they would be using in terms of funding of the deal. But Torrent, according to analysts, could take up debt as much as 10 to 12,500 crores. The total debt on a combined basis could go up as much as around 14,500 crores. Overall, the impact is positive for Torrent because it strengthens their domestic portfolio. They will become the fourth largest pharma company in India. Domestic sales will rise by around 35% based on FY25 numbers. They've gained key chronic brands such as Cilacar as well as Metrogyl, and they've entered the CDMO lozenges business as well. Torrent's past M&A record is all based on domestic pharmaceutical acquisitions. So Elder Pharma, Unichem and Curatio, and they have managed to integrate it successfully. So that is why the street is confident about this. IIFL says that minority shareholders should wait for Torrent shares post the merger. Synergies could lift the JB margins to around 34 to 35% in 3 to 4 years. Nomura says that the reported EPS may fall 30% due to interest and amortization, but the adjusted EPS could rise mid-single to low double digits. They have a neutral rating. DAM remains positive on Torrent. EPS likely to be dilutive in the near term, and 2 times EV to EBITDA leverage is not a stretch. The debt can be repaid according to them in the next 3 to 4 years.
Take that point, Ekta. Thanks a lot for that. So that's about Torrent Pharma and Torrent Group, fairly acquisitive over the last few years, as we've seen. But, the sector this morning has to be the auto space. We've seen a big jump in Force Motors. Endurance, the auto ancillary stock, is doing well as well. Hyundai Motors is the other one, which opened lower and from the lows has seen a rally of almost 4% and has moved to the high point of trade. But has the first half of this year belonged to the auto sector or not? Which sector has outperformed this year? We wrap up on the first 6 months of 2025, how the benchmarks have been, how the broader markets fared, what stocks have been big movers on either the up or the downside. We have Hormaz joining in with that. Hormaz, take it away.
We're fair to say that we have seen it all this year. Tariffs, wars, ceasefires and everything possible. And it's been that kind of moves in the markets as well. The first quarter was making a bottom and then recovering, and the second half has been building on that recovery. And take a look at the Nifty here, 8.5% higher so far this year, and that is after an 18% recovery that you have seen from the lows. The recovery from the broader markets is a lot more pronounced, and it is a result of this recovery that they have finally turned positive on a year-to-date basis as well. Now, which are the stocks that have done well on the Nifty this time around in the first 6 months of the year? No prizes for guessing. BEL is one of them, 41% higher. The first half of the year has belonged to the life insurance companies here. SBI Life, HDFC Life, both of them seeing returns of around 30% each. Among the underperformers, you'll find a lot of IT names, TCS, Infosys, Wipro, all of them making their list here. And Trent, after the recovery, is also down 16% so far, and IndusInd Bank too makes a mention. The broader markets, as we've seen, there has been a recovery, but the stock-specific action has been a lot more pronounced. Look at solar industries, the talk of the town in the first half of the year. Look at BSC, Bharat Dynamics, L&T Finance is up 50% in the first 6 months of the year. On the underperformers in the mid-cap list, you'll find Ola Electric, of course, continuing to make new lows from their IPO price, already halved this year. Oracle Financial, Kalyan, Voltas, Aditya Birla Fashion, of course, down another 30% this year so far. In the small caps, you'd find a lot of other names like Garden Reach. Of course, defense has been an underlying theme, whether it be the benchmark or the broader markets. Narayana Health making new highs every day. Naveen Fluorine too, after a slew of positive brokerage commentary too, is up 50% this year. And lastly, some small cap underperformers. At Brainbees, a new listing is down 40%, but look like Natco Pharma, Anantraj and Tejas Networks too, seeing losses of anywhere between 35 to 40%. The second half of the year is something that has been seasonally positive for the index and for the broader markets as well. And the markets would hope that we do end the year on a high.
All right, the markets will hope that we do end the year on a high. Hormaz, thanks a lot for that. Meanwhile, for right now, there is consolidation at the frontline end of things, even as there are 1,600 stocks which are in the green for about 1,000 which are in the red. We are out of time on this edition of Chartbusters. On that, we will take your leave, but you stay tuned because Trading Hour comes up next. Thank you for watching.